Hello traders, Gary Wagner here just after 12:30 in Honolulu, 6:30 in New York. It is Wednesday, March 25th, 2020, and this is the Daily Report for Gold and Silver. We had a mixed bag in the precious metals markets with gold trading lower on the day and platinum, palladium, as well as silver trading higher. What is interesting is I believe that the sell-off we witnessed in gold was a healthy one, considering we've seen such a large rise from Friday's move up until Tuesday's move yesterday. The other interesting thing that we'll talk about during the show is the fact that we had equal tops today at around 1700, which tells us that major resistance continues to be that century mark. Let's take a look at our price board, and from there, we'll talk about our technical studies. A very interesting day in the financial markets with the precious metals mixed, gold trading lower and silver, palladium, and platinum trading higher. Gold, for example, this is basis the most active April contract, is currently fixed at $1642.90, which is a net decline of $17.90. Compared to spot, which is one of the discrepancies we have seen lately, you can see that spot was down $5.32, but is far below the current pricing of futures. It's at $16.90. Platinum gained about 5.5%, $739.60. Palladium had a tremendous move to the upside, up $443 at $22.30. That's a 25% increase on the day. And silver also traded higher, gaining about 3.25% at $14.72.5 now. A weaker U.S. dollar, now at 100.98. And although the equities came off of their highs today, the Dow still finished up a respectable 2+%, a gain of almost 500 points at 21,200.55. So traders, the first chart that I do want to look at today is a daily candlestick chart of April futures. A couple of things are quite noteworthy. First of all, take a look at the highs that we've seen over the last 2 days. They're pretty much equal, and there is a candlestick pattern called tweezer tops, and that is in essence when you have 2 consecutive days that have equal highs, and it differs from a pattern called the tower tops and bottoms in that for a tower bottom or top you need multiple candles at approximately the same point. And so this is a very good example of that. And so what we can say from this is we do have some real resistance sitting at around 1700. It has now made a play for it on a couple of occasions. This occasion that I'm circling is the only occasion in which it traded above 17, I believe 1702.30, but did not close above it. Here, it hit it and came back, and this was the first attempt that was a little bit shy. The second thing that I want to talk about when we look at this chart is the fact that when we look at a very, very short-term fib retracement, and the fib retracement that we're putting in is simply from Friday's action up until today or yesterday's action, and then plotting various retracement points. Right now, we're right around the 23% retracement point. And to me, that's very healthy because when we consider the rise that we have seen in gold over the last, say, 4 trading days, from Friday to yesterday, for example, we had a 190-point rise when you consider where the market opened at on Friday, which would be the bottom of this green candle, to where it closed at yesterday, and that was at about 1660, 190 points. Now, if we compare the low to the high, it gets even larger. Then we've got a $241 range. And because of that, I feel that some sort of pullback at this point is truly, truly a healthy move. Now, what we want to do is see it consolidate in this area, maybe form a base. We certainly don't want it to go below, call it 1607, because I think that that is a pretty strong level of support between 1607 and 1600 as kind of the bottom of the area. So we want to see if it can trade back above this particular price point. Nonetheless, my recommendation is to maintain your current long position and to maintain your current stop. The chart that we're currently looking at contains two different methods of purchasing gold. Of course, we're looking at gold futures here on the top, and on the bottom we're looking at spot pricing. Now, the reason that I am putting them side by side is I want you to take a look at the price. 613.07 is current spot price, and 1642.80 is our current futures price. We're showing futures actually up in the aftermarket right now, and we have spot trading down just a little bit to unchanged. But the real issue, as far as I'm concerned, is the discrepancy between futures pricing at 42 and spot at 13. Because from the reports that I read, there's an extreme shortage of gold coins. Kitco is out of the majority of them, as well as other major suppliers. And so why would it be where there's a shortage now that you would have spot this far below futures? The only plausible explanation that I can attempt to answer this question is they expect the shortage to grow, expand, and to continue over time. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.